Bro, Nifty finally gave a powerful bounce today. But the real question is, was this the beginning of a breakout? Or is the market quietly setting up a bull trap for the next big move? Banks fired up, VIX collapsed, and heavyweights suddenly woke up after days of weakness. But underneath all this green, there's a pattern that retail traders usually miss. Today's rally looks strong, but the implications for tomorrow could be even stronger. Welcome back to Wealth Maama, your daily dose of sharp, clean, and high-clarity Nifty analysis. If you want market updates that mix logic with a pinch of suspense and masala, you're in the right place. Let's break down exactly what happened in the market today and what it means for tomorrow. Nifty opened almost flat at 25,999, dipped initially to 25,985, and then reversed sharply into a steady upward grind throughout the session. The index touched a high of 26,202 before closing near the day's upper levels at 26,186, giving a strong plus 0.59% gain for the day. The most important part? The entire move had remarkably strong volume backing, 2,492 lakh shares, and the intraday structure showed sustained buying instead of random spikes. This is the kind of structure we normally associate with institutional or algorithmic accumulation rather than retail excitement. Advances outnumbered declines 38 to 12, showing broad participation, although some defensive pockets still remained weak. Why Nifty moved today? Today's rally wasn't random. It was backed by both global and domestic triggers. Global factors. US futures were slightly positive, helping sentiment stabilize after a weak start to the week. Crude oil fell further, which is always positive for Indian markets, especially autos and financials. Asian markets were largely flat but stable, giving Nifty enough room to stage an independent rally. Domestic news influencing the market. RBI liquidity commentary created expectations that financials might see improved credit flow in coming weeks. That's exactly why SBI, HDFC Bank and Bajaj Finserv showed such strong moves. Auto retail data came slightly positive, boosting Maruti again after yesterday's decline. Adani Group names saw strong buying interest due to reports of progress on refinancing and expansion plans. VIX crash came after clarity on domestic bond market flows, reducing near-term volatility expectations. These factors supported today's move and were consistent with the midday analysis, which already highlighted financials gaining traction and volatility cooling down. Sector-wise performance, clear breakout leadership. Today's rally wasn't broad-based, it was leader-driven, and those leaders were crystal clear. Top sectors today. Banking and financials, the backbone of the rally. SBI, HDFC Bank, ICICI Bank, Bajaj Finserv and Shriram Finance all fired up together. This coordinated move typically signals institutional inflow, not random retail buying. When financials move like this, Nifty rarely falls on the same day. And that's exactly what we saw. Auto sector, strong follow-through buying. Maruti jumped almost 2%, recovering completely from the previous session's weakness. Autos gained strength partly due to crude softening and partly because of stronger retail rotation. IT, metals, PSU names, mild to positive. These sectors didn't explode, but they supported the rally without dragging the index. Weak sectors, FMCG, Pharma, and selective consumption names were under pressure. Hindustan Unilever was the biggest drag. Trent and Sun Pharma also slipped. This is typical when market shifts into a short-term risk-on environment, and that aligns with VIX falling sharply. Top gainers of the day. Shriram Finance, plus 3.04%. Strong demand and improving credit metrics pushed the stock higher. Financials were the star sector today, and Shriram Finance benefited from heavy institutional accumulation. SBI, plus 2.49%. State banks surged with big volumes as markets anticipated positive liquidity trends and better credit growth. Banking leadership was critical in lifting Nifty from the morning dip. Bajaj Finserv, plus 2.13%. The stock rallied as investors rotated back into financials and insurance after a week of muted performance. Lower VIX also supported premium-heavy stocks. Adani Enterprises, plus 2.03%. News related to refinancing progress and growth plans revived buying interest. Adani names showed steady accumulation throughout the day. Maruti, plus 1.91%. Autos gained from positive retail demand data and lower crude oil prices. Maruti recovered sharply after being in the loser list yesterday. Top losers. Hindustan Unilever, minus 3.34%. FMCG stocks struggled due to rotation into high-beta sectors. Investors moved out of defensives as volatility dropped sharply. Eternal Limited, minus 1.35%. Profit booking hit the stock after its recent rally. Indigo, minus 1.27%. Airlines reacted to operational cost concerns despite falling crude. Volume spike indicates institutional selling. Trent, minus 0.85%. After strong performances in recent weeks, the stock faced cooling off. Consumption sector overall was weak today. Sun Pharma, minus 0.73%. Pharmaceuticals lost favor as the market clearly shifted into risk-taking mode. India VIX, the silent indicator. VIX crashed to 10.32, a 4.65% drop, one of the steepest in recent weeks. A falling VIX typically signals confidence. But when VIX gets too low, markets can become complacent. This fits perfectly with today's theme. A steady rally with collapsing volatility can be a breakout attempt, or the setup for a bull trap. Support and resistance levels for tomorrow. Support 1, 26,050. If Nifty stays above this, momentum remains positive. Support 2, 25,900. A crucial zone. Breaking it may bring back volatility. Resistance 1, 26,270. This is the fresh hurdle where profit booking may emerge. Resistance 2, 26,350. If this breaks, Nifty can attempt a new short-term high. Bro, Monday can be a trend confirmation day. Today's rally looks strong on the surface, but the question still remains. Is this genuine momentum, or a bull trap forming under low volatility? Here's the suspenseful breakdown. If Nifty breaks 26,270 with volume, the market can extend into a clean breakout move. But if it fails near resistance and slips back toward 26,050, that would confirm that today's rally was simply smart money marking up prices ahead of a reversal. With VIX sitting at ultra-low levels, any surprise news can trigger an outsized reaction. So Monday's first hour will be extremely critical for trend confirmation. That's it, friends. Today Nifty looks strong, but the real test is waiting for us on Monday. Will this rally continue, or is smart money setting up the next trap? We'll decode everything again in Monday's video. If you found this analysis helpful, hit that like button, subscribe, and share it with someone who trades daily. This is Wealth Maama, signing off. I'll see you again with my other playlist videos. Ask me in the comments section if you need me to analyze anything specific for the weekend.